Well, folks, just like that, we went from too much liquidity in the system, right, to now we have a liquidity crisis on our hands. I'm about to take you through what is absolute devastation. We have literally a liquidity crisis, and this has happened so fast. And this is how it happens in the economy, and this is how it happens in the markets, right? Where 1 minute you have way too much liquidity, and the next moment it's like, what? Now we're in a liquidity crisis? Yes, we are in a liquidity crisis, and I want to explain kind of what the right move is in a liquidity crisis and those sorts of things. We'll get into all this, okay? So first off, I thought the best part to start with would be crypto, actually, in this video. So Bitcoin has lost 27.5% of its value in the past 7 days, okay? Now, Bitcoin in the crypto community is, for the stock market community, that would be like Apple stock, essentially. So Bitcoin's for crypto is the equivalent of Apple for the stock market, right? Imagine Apple falls 27% in 7 days. People would lose their minds, right? And that's what has happened here with Bitcoin, with much of those losses being in the past couple of days, okay? Ethereum has lost almost 30% in the past 7 days. That is like the Microsoft of the crypto market, right? XRP is down almost 37%. In the past 7 days. Cardano ADA is down about 43% in the past 7 days, guys. This is 7 days. Solana's down 47% in the past 7 days. Dogecoin's down 37.7% in the past 7 days. Now, in regards to the crypto market, okay, is when you see all those assets falling like that, right? All those different cryptos. This is devastating from so many different angles, right? One, people just don't feel like as wealthy, right? Imagine you got $100,000 in Bitcoin last week. Your $100,000 is now $73,000, right? You had $100,000 in Ethereum last week. Your $100,000 is now 6,000 or whatever it is. No, actually, Ethereum was down almost 30%. So now you're at like 70K, 71K in a week, right? And so, those assets are if you hold crypto, that's what you usually hold, Bitcoin, Ethereum. Now, if you're in the smaller ones, right, that's even more devastating. And with the crypto market, this is very, very important for everybody watching this right now to understand, right? We don't know what leverage is out there in the crypto market. We don't really know any of that. And so this is kind of like a dark situation. And we've never, at least recently, we have not seen a major crypto crash, right? And a major crypto crash is usually when Bitcoin falls 60, 70, 80+%. And we haven't seen that recently. It's been quite some time. And there's obviously way more money in the crypto market than we've ever seen at any point in history. We don't know what leverage or not leverage is out there. And then this whole new situation with this Luna came out of nowhere and just absolutely slapped the whole market. And then, we don't know if this is a bottom or we got, Bitcoin goes to 20K or to 15K. We don't know, right? And this leads to way more issues, right? You have a company named Microstrategy that they own around 130,000 Bitcoin, okay? Around 130,000. They are the biggest public holder you'll pretty much find for a public company, at least, right? And the thing with this MicroStrategy is they are highly kind of leveraged into Bitcoin, essentially, right? And so MicroStrategy looks like a genius when Bitcoin's going up. Let's be very clear about that. It's super smart, right? And it's imagine Bitcoin's at 100,000 a day. MicroStrategy is oh my gosh, how is this company so smart? But let's be quite clear. In a liquidity crisis, this doesn't look so smart. Recently, they bought a whole bunch of Bitcoin. They took out a $205 million loan. And that's just the tip of the iceberg. The amount of the financial situation for MicroStrategy has basically either been issuing shares or taking out loans and these sorts of things, taking out equity to essentially buy Bitcoin, okay? And it's probably the highest, risk thing I've ever seen a public company kind of do, to be quite honest. And once again, if Bitcoin goes crazy over the next few years, they look like a genius. But there's a possibility that MicroStrategy has to basically liquidate Bitcoin at some point in time if this starts to get much uglier, okay? And here's the thing. Their current price, as far as what their average price is, from my understanding, it's in the 40s, okay? So they're massively underwater right now. What I've also heard is they could be potentially getting margin calls around 21,000. If Bitcoin goes to 21,000, MicroStrategy could end up in margin calls, okay? So if Bitcoin continues to go down and down and down, this could be a scenario in which folks start to really panic, right? Because imagine, let's say Bitcoin all of a sudden hits 25, 24. All of a sudden people are like, wait, the Microstrategy, which holds 130,000 Bitcoin, they could get margin called at 21,000. That could be potentially an ugly situation. And all of a sudden you get more panic leading to more panic. Also, a study came out about a week ago where they found about 40% of folks that own Bitcoin are now underwater. Well, I can tell you as of today, that's a lot bigger number than 40%. It might be 50% or 60% now are now underwater, right? Which if you look at it from that standpoint, that angle, it's easy to hold an asset if it's appreciating or if you're even break even. But when you start losing money, and the more money you start losing leads to more panic and more fear, right? We see this play out in the stock market all the time. And so this is a very, very bad situation that could get much uglier. And if Bitcoin does not hold anytime soon, it's going to lead to massive panic out there in the market. And once again, we don't know how much leverage is really out there in the crypto market, and because it's so unregulated still to this day, and we don't know, like, imagine you're in a bad margin situation, a leveraged out situation in crypto, but you also hold stocks. Maybe you sell stocks because you don't want to sell Bitcoin and you need to, cover your leverage situation over there. We don't know how all that's going to shake out. All I know is it is a mess. It is an absolute mess. This goes so much deeper. I mean, even you look at companies like Tesla. Tesla holds around $2 billion of Bitcoin. Is Tesla make or break based upon their $2 billion of Bitcoin? No. Okay. But they could take a very negative impairment charge if Bitcoin continues to fall, right? And it just kind of leads to the I guess you can say the bad cycle of momentum in regards to a stock, where people are looking at it and they're like, they own a couple $1 billion of Bitcoin, sell Tesla. And Tesla did benefit after they had bought Bitcoin, because it initially started going up and people were excited, right? And it's like, it doesn't really make a difference in Tesla's business model. It doesn't. Whether Bitcoin is at 100,000 or whether Bitcoin's at 10,000, it's not make or breaking anything for Tesla. But people look at it and they say, oh, Bitcoin's going down, that's bad for Tesla. And I mean, technically it is, but it's like, it doesn't really matter, but it does matter. It's all about the psychology of the market, right? This has even bigger ramifications. Somebody like NVIDIA, they have benefited massively over the years from Bitcoin mining, okay? No doubt about it, in crypto mining in general. Now, recently that business has been tanking for them. I can tell you it's about to get a whole lot worse. With Bitcoin in the 20s now, and if that doesn't hold and it was to go down even more, like, that business is just done, at least in the short term for NVIDIA, like completely done. Now, the good thing for gamers is GPUs are getting a lot cheaper and probably will continue to get a lot cheaper. Hopefully folks have money to buy GPUs now at this point in time. We'll see about that. But, NVIDIA is a massive market cap, and I know the stock's come down huge, right? Year to date, the stock is down almost 45%. Year to date, we're 5 months into the year, right? And it's down to a $416 billion market cap. But, that's just because it leads to more negative cycle. It leads to less positive numbers, right? It leads to folks being fearful and not being excited about the business. And that's not a good thing for NVIDIA, obviously, okay? Look at this here. Look at this, guys. Oh my gosh. Do we have... The Russell is now down over 30%, which is a small cap index, IWM. Over 30% it's now down. The NASDAQ now is down almost 29%. And almost all that has come this year. That's the craziest part. Almost all those losses have come this year in terms of the NASDAQ. The S&P 500 is now down, getting close to bear market. We're getting close to bear market on the NASDAQ, right? Once we hit 20% down, we're in bear market now. It's at 18.3% now. Dow's been the one holding up. It has, only down 14%. That's good. Now, this drop essentially has been more vicious to me than the fall of 2018 dip or crash or correction, whatever we want to call it, bear market, which that one treated me very bad. This has been way worse, okay? But the fall 2018 dip, if we want to call it that, 27% down we went on the Russell, 23.5% on the NASDAQ, which once again, we're already over 5 percentage points worse than that. S&P 500 fell 20.5%. If it wasn't for oil and gas stocks, Apple and Microsoft, believe me, we'd be down a whole lot more than 18.3%. And the Dow's been the one that's been holding up the best, right? So now we're in a market where the NASDAQ's been far more vicious than 2018, and IWM, Russell stocks have been much more vicious than 2018. So now, if we want to go back to a time period, now we have to pretty much go back to the 2007 to 2009 crash. And now this is the thing people are wondering. Are we going into this, right, where all indexes are going to go down 50% plus, right? Unemployment's going to go sky high, and those sorts of things. Now, let's talk about how realistic of a scenario that is, okay? In order for that to happen, you need two more things to happen vicious. You can't just have Bitcoin fall. You can't just have stocks fall. In order to get that, we're going to need real estate to get devastated. I mean, absolutely obliterated, okay? Not like real estate's down a little bit and, homes just aren't quite moving like they were moving. I'm talking obliterated. I'm talking pricing down 20, 30, 40, 50%. I'm talking foreclosures. I'm talking people that had new homes being built that are just canceling contracts. You need to see that in order to talk about 50% plus down on the indexes. That's the type of scenario you really need to have in order for that to happen. Now, and the second thing you need, before I kind of explain a little more about the liquidity crisis, the second thing you need, massive amounts of jobs to be lost by the millions, right? And if you get that sort of scenario, we're going down 50%. If you get that scenario, but that's a big if, because we need to see the housing crash and we need to see mass unemployment. If you get that, dude, we're going down 50%. There's no doubt about that, right? The Russell has more to fall. The S&P 500 has a whole lot more to fall, and the NASDAQ has a whole lot more to fall. But that's a big if, right? And you can't really bank things on those sorts of scenarios. It's always a possibility, but that's what you need for that to kind of play out. Now, the problem with the liquidity crisis, okay, is with all assets dropping in price, people only have so much to put into these assets, right? Including the guy right in front of your screen right now that's recording this video, right? If 5,000 stocks fall tomorrow, I only have money to maybe buy one or two of those stocks. I can't buy the rest of them. So my liquidity is only going so far right now. Now, let's say somebody cancels a home and, some builder wants to sell that home for cheap, right? I can't put money in that home because I'm putting money in that stock. And let's say crypto is simultaneously crashing. I really can't put money in that crypto because I got to put money in these stocks over here, right? Or if I buy that house, then I don't have money to put in stocks. So when you're in a liquidity crisis, it can get so ugly so fast because people only have so much money to go around for investments. And it doesn't matter how rich you are, how poor you are, how middle class you are, how ultra rich you are. And everybody has a limited amount of money to invest in assets at a given point. It doesn't matter where you are. You could be the richest guy in the world, Elon Musk. You could be the poorest guy in the world. Everybody has a limited amount of money they can put into whatever investments they want to put that money into. And in a liquidity crisis, it's vicious, right? Go back to 2009, right? You had real estate just collapsing, home prices getting insanely cheap. Well, if you were buying a home, then you couldn't put that money in the stock market at that time, right? So and now we got this other new asset class that has come out of nowhere over the past 10, 12 years, which is crypto, which also takes people's money, right? So this is just like, we're in a liquidity crisis now, and the last shoe to drop, if it's going to drop, is real estate. Real estate lags stocks, real estate lags crypto, okay? And just the question, and I think at this point in time, it's becoming like everybody's expecting real estate to start dropping. I don't know. I don't want to say everybody. I think there's still a lot of people that are still either neutral on real estate or actually bullish. Not as bullish as they were, but still kind of bullish, right? And I don't know. It's hard for me as this year goes along for anybody by the end of the year to necessarily be bullish on real estate, at least from kind of my perspective. We'll see how it all shakes out, obviously. But, this is getting insanely ugly, insanely quickly, okay? You look at these stocks here today, right? And there's no liquidity to buy any. When you see these moves, it's not necessarily because these companies are trash, okay? Because everything's falling now. It's not like it's just small caps, just mid caps. Everything is falling now. Apple was down 5+% today. It's flipping flapjack in Apple. Amazon, is down 30 or 40%, like in a snap of fingers. Tesla, everything is going down now, okay? It's not because these stocks are trash and they have no business models and they're horrible, things like that. It has nothing to do with anything anymore at this point in time. This is all coming back to liquidity now. These stocks have no liquidity. They get that selling pressure, but they just don't get that buying pressure on the other side. And it's just too overwhelming with the selling pressure, and that buying pressure is just not out there because a lot of folks are scared right now to invest into the market. A lot of folks are waiting for the Fed to do something, and the Fed's probably not doing anything for 3-6 months. And so those folks are kind of like, I can't buy right now. And so although you get these insane prices that it's like, how is this stock trading at this price and this stock and this stock? There's just not that buying pressure on the other side, regardless of price. And that's how you get these insane moves on stocks that are already down 70, 80, 90%. You look at a Unity down 37% today, a coin down 26%. And remember, with Bitcoin, this whole dramatic Bitcoin situation, right? This could pull down companies like these even more. We have a liquidity crisis going on now on our hands, right? You look at Shopify. This stock's down almost 82% since November, right? 82%. This is no longer, Shopify is not a garbage business model. Shopify is not horrible. Shopify has a great future. Great future. Shopify will grow revenues massively over the next 5-10 years and net income massively over the next 5-10 years and margins and expand their business and do incredible things and be a much higher stock price 5 years from now than they are today. But in this market, let's be very clear, there's no liquidity. There's no buying pressure on the other side for anything, and especially for Shopify. And so that's the market you're getting into. It's not that Shopify's trash. It's that there's no liquidity for the stock right now. Tesla's down, almost 39% year to date. Tesla, I can tell you, and I've been in the Tesla community since 2018. I know a lot of people that are very highly leveraged on margin on Tesla. And the reason they are is because, let's be honest, since 2019, Tesla was a huge moneymaker. And yeah, we had some dips here and there, but it just ultimately over a 3-6 month span, it just continued to beast. And so a lot of people, they start leveraging, they start margining, right? I know a lot of people that are significantly margined in Tesla. If this baby continues to drop, it creates margin calls and people have to sell shares at really bad pricing. Now, you might be on the other side of that and be like, oh man, I hope they get margin called. I would love to buy some Tesla for 400 or 500 or 300 or whatever, right? But we can't deny the fact that that's definitely a realistic possibility here. And never mind if simultaneously you get some orders dry up or something like that and some like troubling numbers in the back half of this year for Tesla, that would be the fuel to the fire. Because if the story for Tesla all of a sudden became this isn't really growing the way we thought it was going to grow simultaneously with a margin call situation, I mean, that could get insanely ugly, insanely fast. And in this market, no one cares about Cybertruck. No one cares about autonomous taxi networks. No one cares about the Model Y. No one cares about the Shanghai Gigafactory. In this market, no one cares about that. And that's the hardest thing for fundamental investors to understand in a market like this. But just no one cares about that. It's just like sell it by any means necessary. And that's how you get the stock already down 38, 39% year to date. With the NASDAQ, with the S&P still not even down that insane of amount, right? And so this is just kind of the liquidity crisis we have on our hands. Netflix isn't suddenly a trash business model. The valuation is extremely compelling on Netflix. It's one of the most famous brands in the world. This isn't suddenly a trash company. What it is a liquidity crisis we have going on our hands right now. And there's no buying pressure for Netflix. And so this stock could be at 200, 100, 300. There's just no buying pressure out there for this stock right now. And that goes for every stock in the market, right? I mean, look at Dutch Bros after hours. This company just reported earnings. The earnings were not a disaster, but the stock is treated like it's a disaster. The stock's down 36.5% after hours. After today, it was already down almost 16%. It was down 16%. It's down another 30, almost 7% after hours. We'll see. Maybe this is like another one of those stocks tomorrow that's all of a sudden down like 50, 55% or something like that. We've seen those stocks, Upstart and Desktop Metal and some of those that fell 55, 61% the next day. Dutch Bros, really good company, really well run. But the valuation definitely got pushed for a while there, and now it's going to have a liquidity crisis. Not really necessarily in the fundamentals of the business, but in terms of the stock price, it's going to be in a liquidity crisis now. And then simultaneously, You're going to have people even worrying about the financing for Dutch Bros for new locations, because they could definitely be relying potentially on financing, right, to build out their business faster and taking out loans. And then if you have liquidity drying up, people start to worry about all this, right? And then you get into the banking system, which isn't even something we're going to cover in this video. That's a whole other can of worms, right? This is a liquidity crisis we have going on in the financial markets, and we're watching it play out in real time, right? Upstart, this stock, fell another 16.6% today. After it just fell 55% the day before, the stock is now down over 92% in 7 months. 92% in 7 months. You know, that's a market we're in right now. There's no liquidity. There's no liquidity in this market. Now, something very interesting just happened in the market. I'm talking very interesting, okay? So if you go back to 2009, the 10 most valuable companies out there were ExxonMobil, Walmart, Microsoft, AT&T, Johnson & Johnson, Procter & Gamble, Berkshire Hathaway, Chevron, IBM, and General Electric. That was a top 10, okay? Those are almost all seen as like safe business models, or at least at that time they were considered the safest of safe, and those are the biggest market caps in 2009. Okay, now something you're going to want to pay attention to here is what was the number one, what was the big dog? An oil and gas company. Okay, and that was the last time an oil and gas company was number one for a long time. But guess what just happened today? Officially, an oil and gas company is now the number one biggest market capitalization in the world. Saudi Aramco is now the number one biggest market cap in the entire world. And I think it's almost symbolic of the stock market, and almost symbolic of this time period we're going through, that you go back to 2009 and you looked at an oil and gas company was the biggest market cap in the world, and then obviously, that trend ended and Apple overtook it, and all these big dog companies overtook it, and then all of a sudden you got this oil and gas company come back and take back the reins of an oil and gas company being the number one biggest market cap in the world. And that's the market we're in right now, right? And the more risk off it goes, the more what is seen as safer companies, if you want to call them that, which I don't really truly feel like these companies are safer. I can't say Johnson & Johnson is safer than Facebook, or safer than Amazon, or safer than Google. I just can't say that. But the market views it as that, okay? Berkshire Hathaway views that as a safer company. Procter & Gamble, those sorts of companies are viewed as safer in this sort of market. And so just a kind of very symbolic move there, right? Now, let me kind of give my opinion on, like what's the right move to make in a liquidity crisis? Buy, sell, hold, those sorts of things, right? So the first thing is, I'll talk to the people that do you have a stomach, okay? And when I say stomach, what I mean essentially is, do you have the stomach to get through this market? If you have the stomach to get through this market, then 2022 represents one of the best buying opportunities we've seen since March of 2020 and since 2009, okay? That's what this year represents, because we got everything crashing left and right, and it could get worse. We don't know when the bottom is. We don't know whether we bottom today, or we're going to bottom next week or next month or at the end of this year. We don't know. All I know is assets are getting incredibly cheap. Like buying some of these stocks are like shooting fish in a barrel right now. And if you got the stomach to get through it, I can understand like building out positions and investing aggressively in this sort of market, why everything's just dropping like a rock, right? But if you don't have that sort of stomach to get through this, I don't know how folks can even invest in this sort of market, because you got to understand, a lot of these stocks are getting so ridiculously cheap, but it doesn't mean they can't be cut in half again. And we've learned this with us, like Shopify. I pulled that one up earlier. That's a perfect example. Shopify was $1,700. It drops to $850. The stock's down, 50%. And you say, this stock's down 50%. I love Shopify for the long term. I'm buying some shares, right? And then it drops to $425, and it drops another 50% from that price, right? And since then, it's dropped almost another 50% since that price, right? And it's like, where's the bottom? So if you don't have the stomach to get through this market, I don't know how you could even be a buyer in this market, because it is just absolutely vicious, and you don't know where the bottom is. But if you got the stomach, you're getting deals that we haven't seen in a long time. And the longer this goes on for, the more the market drops, the bigger buying opportunity it creates for investors that we just haven't seen. And so that's why this year, for me, I am 100% focused on just acquiring shares and being as aggressive as possible in the market in terms of picking up these shares for what I feel is very significant discounts. I'm not trying to time the bottom. That's an impossible game. I don't know whether we're going to bottom when today when the Russell was down 30% or whether we're going to bottom when the Russell's down 60%. Who knows? I don't know. I don't think anybody else knows. I'm not going to try to play that timing game. I'm trying to play the game of, I see this asset. I love this asset. I think it's extremely cheap. I'm going to load up on shares of it. I'm going to invest aggressively in this sort of market. But I got the stomach for it. And I've had the stomach for it. I've been through, I started at the end of 2008 and 2009 in that crash. I went through the 2011 double dip stuff. I went through that vicious December 2018 crash. I went through the March of 2020 crash. Now I'm going through this massive bear market that we're going through, and who knows how long this lasts for. I got the stomach for it. Not everybody has the stomach for it. And you got to ask yourself, do you have the stomach to get that through that sort of market? Because even if you're buying a stock at a great price today, right? Let's say there's a stock out there that's $10 a share, and you're like, dude, this stock's going to be $50 in a few years because of the net income's going to go to this price. It's going to command this P, okay? So you're out there buying those shares here today. If it goes to 5, are you going to be able to still hold through that, right? If it goes to 7, are you going to be able to hold through that? Because no one knows where the bottom is for these stocks when they're just dropping like a rock and you're in a liquidity crisis, right? So that's a big thing you got to ask yourself. Do you have the stomach to make it through to the other side when the sun does shine again? And once again, we don't know whether the sun starts shining again this month, next month, 6 months, 3 months, 9 months, 12 months, 18 months. We don't know when the sun comes back out. At some point it will come back out. We do know that. Unless you're a doomsday person and you just believe like we're down for all of human history, right? Eventually the sun will shine again. We just don't know when it is. And so you have to get to that other side. And, this is a sort of market that just devastates folks and they end up leaving the market. And if you're going to really be in this game, you really got to be in this game, okay? Hope you guys enjoyed this video. As always, Hungry Bull email newsletter. That will be linked in the description down there. We keep you up to date on everything going on in the stock market, crypto market, business community, earnings, everything like that, absolutely for free every day. We send that to your email inbox. Check that out, guys. That is flippin' flapjacking amazing. I read it every single day. Colin Dieter write that thing, and it is awesome, okay? And so make sure you sign up for that. It'll be linked in the description down there. Much love as always, and have a great day.